Hey everybody, welcome back to Real Estate Simplified channel. I am back with another market update for the month of March. So I'm going to be going over the data from the North Texas Real Estate Information System, also known as NETRIS, to really see what's going on with the housing market where I specialize. So that's going to be North Texas, a little bit north of Dallas, specifically that Frisco area, and a little bit of those surrounding cities. So as I've shared before, if you're getting information from someone that does not utilize data from a reputable source, you might not be getting accurate information. Or in the best case scenario, you might simply be getting an uneducated opinion. So if you're going to a family event, family gathering, hanging out with some friends that like to just chop it up, and they're providing you information about the housing market, ask them where they're getting that information from. So I'm talking to you, Uncle Joe, or I'm talking to you, Aunt Sally. If you're just saying the housing market's going to crash, but you have no information to back it up, we gotta have some discernment around that. But anyways, here we go. First, I want to review the new active listings that hit the market for the last 2 full months. That means you're not going to see anything in here about March because active listings mean it just came on the market. It's fresh, it's new. So something could come on the market March 28th. March 29th, and it wouldn't be within this data just yet because I'm recording this in the first week of March. So I just wanted to have that little bit of a disclaimer. So when we look at this, there was a slight dip in the overall count of new listings from the month of January, which was at 874, to February, which was at 812. So this number is still much greater than the new listings that were available in December of 2022, which was at 582. And if we look at the differences between 2022 and 2023 for the month of February, the numbers are pretty consistent, which is something I really like to see. So 812 compared to 854. Now, I do think, again, we've got to keep in mind that we're not seeing the full month of March just yet. So that'll be out when I do the market update for April. Another thing to keep in mind with the lower numbers within December timeframe and just winter months in general is that this is pretty common. Real estate is very cyclical. It's going to go up, it's going to go down. And if you put the years over each other, you will notice that it's also pretty common that the active listings might dip down a little bit in those winter months, and then they're going to pick back up when the start of summer comes along. So second, I want to review the average list price. It looks like there was a slight dip in the price by almost $8,000 difference. But I will say the good news is that the price this time last year was just under $638,000. The average list price for this year is just below $680,000. So that is around a 6% increase in home prices. Compared to what the stock market is doing right now, a 6% increase over the last year in the housing market, I will take that. That is a huge win compared to what we're seeing in the stock market for the majority of stocks. So overall, a steady increase in prices since the month of December in 2022, and then a flat line from February to March. A positive takeaway from these numbers is the fact that prices are not taking a sharp drop. I think a lot of people were hoping for, maybe even expecting, prices to fall off a cliff at the start of 2023. So because of that, I think that is a good sign. But we'll have to see what happens with home prices and how they might be affected by the recent mortgage rate increases, which have also affected the overall days on market, which I'll get into here in a little bit. But the next stat that is important to review when assessing the overall health of the market is the ratio of sales price compared to the list price. Depending on that percentage, it is a good indicator of the health of the market. Most recently, that ratio is at 98.9%, which is higher than the prior 4 months. So at least the way I'm looking at that information, that is a really good sign of a few things. The first one being homes are being priced correctly. Second, buyers believe this is the correct price for the home. And then lastly, appraisals are coming in at the agreed upon sales price. Those are 3 really, really good signs of a strong comp ratio of a market where the prices do make sense. Because 1, sales price is where it's at. 2, people are agreeing to buy the home at that sales price. And then 3, the appraiser is saying yes, based on comps of properties that have recently sold in the area, that is what the home should be sold for. That is the value of the home. In layman's terms, if you look at the comp ratio and think 98.9%, let's break it down and make it even more simple. Let's say there's a home that's on the market for $100,000, and a buyer comes in and wants to purchase the home for $98,900. The seller agrees to that price of $98,900. The appraiser comes in and says, yes, the value of that home is in fact the $98,900 price mark. And there we go. So that's where the 98.9% comp ratio is coming from. So hopefully that's helpful to break it down like that. Now, I will say if we look at the summer months, I think the ratio is going to continue to increase the closer we get to those months. If we look back to the summer months in 2022, the ratio remained consistently over 100% comp ratio, even when mortgage rates were beginning to climb. So we'll see if that prediction is correct in the next monthly market update. Now, the next point I want to review is days on market, or DOM. Remember, this simply means homes are staying on the market longer if that number is higher. So the number has increased every single month since April of 2022. Take it for what it is. I don't know if that's good or bad. It is what it is. So up until this point in March, that number has reached 71 days. Looking back 12 months, that number was 15 days. I am predicting that that number starts to go down month over month, even with the rising rates, because we are getting closer again to those summer months. But again, you'll have to check back next month to see if that prediction is correct. Either way, I'll hold myself accountable whether my prediction is trending in the right area or whether I'm just completely off. So a reason that I think that's going to happen is within the last couple of weeks, I have been seeing multiple offers on properties at a range of price points within the first couple of days being on the market. So the home is active on a Thursday, and I'm already starting to see the offer deadlines again for, let's say, Sunday, 7 p.m. So fast turnarounds are picking up. I've talked about the mortgage rates a few times already, so let's talk a little bit more about that in more of a deep dive real quick. As of the end of last week, rates were around 6.5%. By the time you see this, you're probably going to say, Brandon, that's not true. They're already closer to 7 or maybe even over 7. I totally understand that. So they're starting to tick back up again, and really buyers never saw enough relief for them to be ready to jump back into the market head first. So I think we did see some relief compared to October and November when they almost hit 8%. But I do have a feeling some people are still waiting, sellers included. Maybe those sellers that were in a home and they decided not to move because they could refinance their home, or maybe they could even do a cash out refinance. Do some of those upgrades, maybe add a pool, maybe add some of those amenities that they were looking for in the purchase of a new home, but instead they were able to do it to their current home. So I think some people are probably still waiting for rates to drop before making a move. But to be honest, who knows if and when that will be? We cannot predict the future. Timing the market is a challenge. Some people have done it, but I think for the most part, it's pretty much a guessing game to decide whether or not you lock in a rate that day, you make the purchase that day, or put in an offer. You really don't know if the market's going to go up or it's going to go down, or in this case, interest rates are going to go up or going to go down. So if you want more of a deep dive into the mortgage rates, I would strongly recommend you go check out Jennifer Beeston. She has a great explanation of what's going on with rates and the reason they recently increased on her channel. Lastly, let's look at whether we are in a buyer's or a seller's market. Remember, a healthy or balanced market is one where there is a 6 to 9 month inventory. So where are we at today? There was a dip in inventory overall, which means the months of inventory also decreased to around 2 months compared to over 3 months at the end of January. So by definition, that means we are not in a buyer's market. I think we see that also within the price ratio comparing the sales price to the original list price. So even though this is something that I think is really, really interesting. So even though we have a much higher days on market, the comp ratio is still very close to 100%. So there's a big reason for us to say, look, we're not in a buyer's market. Days on market are higher, yes, but the sellers are still getting, for the most part, almost exactly what they're listing their price for. Typically in more of a buyer's market, you're going to see the comp ratio or the sales price ratio being much lower, maybe 80s, maybe low 90s compared to almost 100%. So that's just my perspective on where I think we are with a buyer's or a seller's market, and also taking into consideration the months of inventory being just around 2. So that's pretty low for right now. But what does this all mean for the housing market? As of right now, in the area that I specialize in, right, I'm going to say that every single time, where I specialize in North Texas and specifically around Frisco, I do not believe we are still in a housing market crash. Prices are remaining steady. Homes are still longer to sell, but I think that's about to change. I think the days on market are going to start ticking down based on those multiple offers and offers accepted within 2, 3, 4 days again. But last little nugget I'll add for you is, if you locked in a rate before the most recent increases, now might be a good time to buy, because the numbers might not change too much until the next Fed meeting. But that's just food for thought. I'm not encouraging you to do anything one way or the other. But hey, for more information like this in the future, subscribe to the channel if you find this information valuable, or reach out to me directly at either BrandonKaylaRealEstate@gmail.com or 979-541-7937. I'll be talking to you again real soon.